Hi, everyone. This is Rob Roy of Elliott Wave Options, and welcome to TradeFinder Live. For those of you that may be new with us tonight, welcome. For those of you that have been with us before, you kind of know how things go, but please bear with me for a minute while I bring everybody else up to date. First of all, if you haven't seen any of our recordings before, or even if you have, you know that we have to do this disclosure/disclaimer. It is a requirement. If you are brand new, please take a screenshot of it, read it in detail at your leisure. But a couple of things that the powers that be want us to make you aware of is, number one, we are not registered to give individual investment advice in the United States. And two, because we have a lot of international viewers, we have a lot of international subscribers as well. Any pricing that we're talking about is assumed to be in US dollars unless noted otherwise. Other than that, again, please read the rest of it in detail, your leisure. So the way TradeFinder works is we'll do a little bit of a market update. We just did a recent SPY update on YouTube. Hopefully you've been watching that. Holy cow, last week when we did this, we certainly got a rise out of people with how Elliott Wave was so dead on with Bitcoin. Been besieged since then with comments from YouTube and from Twitter. And I mean, it's amazing how far-reaching Bitcoin goes. And I think there's a whole new crew of people interested in Elliott Wave now. So we'll go through and do a review of any closed alerts that we have done for our subscribers, so you get an idea of how our alert service works for our subscribers. And then we'll look at our weekly trade ideas that we do with TradeFinder, which are what I call trade considerations. And those are basically trade ideas that we look at, but at that point, you're on your own. Our subscribers get an alert when we enter a position, they get alerts for adjustments, and they get alerts for exits. So that's the difference between having an alert subscription and just attending TradeFinder. You're on your own for getting in, getting out, etc. But we do find some trade ideas, and with whatever time is left at the end, we go through a general Q&A, which usually amounts to you guys giving us your favorite stocks, and we take a look at what our indicators say about them. So that's it. That's how TradeFinder works. So again, welcome. Start off by taking a look at the market. And in the last update on the SPY, we talked about how we had a bit of a symmetrical triangle and that we were likely to break one direction or the other. We still have this last bastion here of a zigzag pattern, which has a 426 target. And I made a comment that with an upward breakout from the triangle, that could take us to 426. That's the last upward target that I have, and they're all extended. We already had the extended C wave. You've all seen that. If you haven't, if you are new, please go back and look at some of the previous videos, some of the previous YouTube videos that we've posted. A lot of people that have become new subscribers became new subscribers because they went and looked at our previous TradeFinder webinars where we identified trade ideas, and our record on TradeFinder has been pretty darn good with those trade considerations. So go back and take a look if you are fairly new, because we were calling for this level of 420 for literally months. So we got there, and then the last extended level, which by the way, that 420 level was an extended C wave and also an extension of the wave 5. You can see 159%. So we're pretty darn close to 161.8. We aren't quite there yet, but we're awfully close. And so breaking out of this triangle to the upside here, we're finding a little bit of resistance at this 420 level, but possibly we go up and hit 426. And if we do, I think that just signals everything is at an extended level. My favorite confirming indicator is the DMI. And you can look at this and see that it is basically showing no interest at all in this upward breakout. So we did break out of the triangle that we shared with you over the weekend. And even the positive directional indicator kind of was like, oh, really not much of a crossover there. If you get into the DMI, you learn the crossover rule. It's just many other rules. But the ADX is just diving straight down. So it's showing that there is serious consolidation, but no strength to this upward breakout move. People have been asking me, is volume included I hear that all the time. And it's just because we don't talk about it a lot, but it is in our technical trading system. And I want to really emphasize that just because we don't talk about it, talk about the DMI and some of our other indicators more, I just figure that volume's a given, right? I mean, ever since the dawn of trading, price to volume action has been important. And if you have a technical trading system and you're not including that, I think that's a mistake. So yes, it is included in there. We just don't talk about it as much as maybe some people would like to hear. Maybe I need to spend more time talking about it. But look, you can see what's happened here on the breakout. There's no volume behind it. And we've been sharing storm clouds. I don't know, is that lightning bolt about to hit? What's that lightning bolt going to be? What's going to start it? We'll just have to wait and see. Lots of banter about how vertical the M2 money supply is going. It's all over the financial networks today. And I'm a big Fed follower, as you know, not a Fed fan. Let's be specific here. I'm not a Fed fan at all. I don't like the idea that there's a central bank controlling all of our money. I mean, it should be controlled by us, not 12 families. But anyway, let's get off of that soapbox for another day. But there's not been a lot of volume behind this move to the upside. There's not a lot of strength being shown from the DMI. I just think that we stay cautious, and that's what we've been doing. For our alert subscribers, we've been closing out upward positions. We had some that came back from the dead, so that was nice. And so we've had the opportunity to close those out. And our new positions that we're entering for our alert subscribers are strangles. The fact that we don't care which direction the market goes. And we're going to continue that. What would change that thesis? Well, if we break above 426 and our confirming indicators change, in other words, we break above 426 with some volume, and the DMI turns around and shows that there's some confirmation there from a strength standpoint on that upward move, well, then we might look to add some more long positions and the whole thesis would change. But for now, you stay with, you stay with a girl that brung you, whatever, the old cliches. But for the 426 level, we stay with our current thesis. If we hit that, it's if we break that on some signals from our confirming indicators and volume that we change. But up till now, we're going to stay with adding strangles. What I like to see happen, and I've been encouraging our subscribers to stay excited about this, because we've been around for 3.5 years now, and we haven't had really a significant downward. We had 1 month, right, when the COVID thing happened, March of last year. We haven't had a downward move of any sort of substance in the entire existence of Elliott Wave options. So our subscribers really haven't seen how much money you can make when the market begins to move to the downside, how fast that trades can generate profit. Now, the spikes in volatility, all those things, they haven't been experienced yet. That's still to come. And I would like to emphasize that too for everybody that's watching, that is out there. We will have another 20+% correction. And I made a comment, and sometimes you say things and you don't realize that they're as general as they are. But I made a comment that I'm expecting a 10 to 20% correction. Well, it's just kind of a general statement. And somebody said, well, 10 to 20%, that's wide. Can you be more specific? Okay, let's be more specific. There were some questions asked, and I've got several of them here because so many people came in and asked questions from YouTube and Twitter, as I mentioned. So I want to cover those. I want to respect those people that reach out that aren't able to attend this event live, and they're talking about the gaps in the SPY. If you've seen anything that I've done, one of my mantras, I have a few that people, jokingly talk about, and they use the word fascinating a lot as far as the market, because it is fascinating to me. No security in any time frame gets very far away from the 10-day moving average is another one, and gaps get filled. And the data shows that. Somebody did a study on it and came out at 94%. 94% of gaps get filled. So there's the data. So we have a gap right here. Is that going to get filled? That was the question. Do you think all these gaps are going to get filled? Yeah, I do. The question becomes, and this is where kind of the politically correct hedge comes in, right? Timing. When do they occur? I don't know. Nobody knows that. Some gaps get filled immediately. Look at this. So we had this gap down, immediately got filled within 2 days. And then we gap down again here, filled immediately. So some of them get filled quickly. Some of them take some time. Is this gap at 400 going to get filled? Yeah, I feel super confident that it is. I still think that these gaps down here are going to get filled at some point in time as well. So it's just a matter of when. So if somebody has a crystal ball that can come up with that kind of timing, well, then you've got something. But it's something to keep in the back of your mind. When the markets start moving to the downside, those gaps will be looked to be filled, in my opinion. So to summarize where we are in the market, I feel like we have some resistance here at 420. And do we go up to 426? We may very well. The futures right now are up 11. And the high is at 420. 4,200 is where the high on the futures moved down just a couple points from that point. So you can see that this 420 level is acting as some significant resistance. We can break that, hit 426. At that point in time, I think now everything is overextended. The last zigzag pattern hits this extended C wave level, and I would be surprised if we move significantly higher from there. But if we do, you have to trade what the charts show you. You can't get tied into what you think is going to happen, because the market doesn't care. The market doesn't care what I think is going to happen, and the market doesn't care what you think is going to happen. And if you get to the point where you feel like you know more than the market, and you start to learn things, you're like, okay, well, with the Fed's injecting liquidity and all these things, this is what's going to happen. That's usually when the market goes the other direction. Market doesn't care. The way to be successful in trading is to take your ego away, take what you think is going to happen away, and trade what the market shows you. Listen to the market, not what's in your own head. Follow the charts is the way you listen to the market. So that's being a technical trader. So we have 426, and that's our thesis. That's an extended level. Everything is extended at that level. All of our technical indicators are showing weakness. So the expectation would be for a move down. But if we break above that and things change, then you have to change your mantra. Otherwise, you're going to be sitting on tons of short positions with the market moving higher, and that's not going to be successful. Trade what the market tells you. If you take anything from tonight's webinar, that's it. Listen to the market and do what the market tells you to do, even if it's the exact opposite of what you think the market should be doing. So yes, I do feel like these gaps are going to get filled, and I think this 400 gap gets filled pretty quickly. And when do we fill these? Maybe we don't come down this far until the Federal Reserve starts raising rates. But another thing that experience has shown me is the Federal Reserve will start raising rates. If you looked at the last SPY update, if you haven't, go look at it on YouTube. We showed a chart of the Federal Reserve's balance sheet and how vertical it is. That's their money. They're going to want it back, and they will take it back. And when they do, that means interest rates start to go up. And the first hint of rates going up from the Federal Reserve, and I don't know if that's going to be a few months from now or a year from now, but at some point, the Federal Reserve will begin to look to raise rates. And as soon as there's any sort of change in the language when they do their monthly statements, and there's the slightest hint of rates going up, watch what happens to the market. It's going to be a really ugly down day on that day when they say that. We could have 1,000+ down day on the Dow easily. So until that, the market is living off that liquidity, liquid heroin, whatever you want to call it. People use all these different terminologies, but that's where we are. So again, I don't have any change to our current stance unless we break above 426 and there's a change in our indicators. Right now, that's what we're looking at. So I wanted to share that with you. And I thought I would just go ahead before I get into our website and a trade alert that I wanted to show you. And I think I've been pretty fair, and I'm going to talk about that in a minute. I know you're going to ask, because everybody on the planet has asked since last week, where does Bitcoin go from here? Well, if you weren't here last week, here's what we showed. So this was last week. We had this zigzag pattern to the downside right there, and we were at the 100% extension. They said, if this level doesn't hold, we're coming down here. That's how zigzags work. If you pass a current extension level, and we could have stopped there, we're going to the next level. Well, the very next day, boom, look what happened. We went right down to the 161.8% level. Again, it's on video, it's recorded. You can go watch it, posted, done ahead of time, not Monday morning quarterbacking. We said that before it happened. And as soon as Bitcoin hit that level, look where it recovered to and where it closed. And so from there, we've been churning sideways. This is also where the previous 4 lies. And when you have a wave 5, extends 100%, you're supposed to go back to the previous 4. So we have 2 major levels giving us this 161.8% level, this 30,000, let's round it to 30,500 level, which was an extended level on the zigzag to the downside and the retracement from the wave 5 back to the previous 4. So everybody's been asking, where do we go from here? I don't know. And so neither does Elliott Wave. And I know that's not what people want to hear, especially when you make a call like that it's so spot on. Everybody wants to know where we go from here. Well, if you're being smart and you're being prudent, you need to wait. Let the next pattern set up. And that's the way I feel on Bitcoin at this moment, is let the market tell us where we go from here. Sometimes there's in between levels. There's not always, Elliott Wave relabels a lot. And you can go from, okay, here's the current pattern to immediately to the next pattern. But there's sometimes when patterns satisfy themselves where there's a little bit of a lull where you have to let the next pattern set itself up. And I think that's where we are right now on Bitcoin. We've kind of satisfied this oversold condition with the 10-day moving average. We've come back up to that level, and you can see we're consolidating here. All that makes perfect sense within Elliott Wave. You hit these levels and then you consolidate. And from that consolidation, maybe we move into a triangle. It wouldn't be surprising to me to see something like this form in this area. That would be quite normal from an Elliott Wave standpoint. And then Bitcoin makes its next move. Maybe it doesn't do that. Maybe the next impulse move starts sooner rather than later. The one thing I can say is that if you're long Bitcoin, you don't want this 161.8% level to be broken, because if that gets broken, then we're all the way down here. And that would be pretty ugly. Be a bit of a surprise if we came down there. I wouldn't expect to see that, but it could happen. That's the next level. And if we break to the upside, we're starting a new impulse move. And is it a 5-wave pattern? Is it a zigzag pattern? Is it a flat? You could have an impulse move, and then it moves into a flat, and we could be churning here for a number of weeks to come. We'll see. But at this point in time, right now, according to Elliott Wave, if you're picking a direction, you're guessing. So maybe you guess right. I hope you do, because I want everybody to make money. But if you're picking a direction using Elliott Wave right now, you're just flat out guessing. And if you get it right, obviously, with the volatility in Bitcoin and the other cryptos, you can make an awful lot of money in a short period of time. If you guess it wrong, you can lose a lot of money in a short period of time. So let's be prudent, let the pattern set itself up, and then we'll go from there. So I thought I'd just get that out of the way. All right, so what I did want to show you is another one of our trade alerts. And I could have shown you this a couple of weeks ago because we closed this out, as you can see, on May 12th. But instead I showed RRC, which was a different scenario. It was a trade that was losing, and in the last month, it recovered the loss. It shot back to the upside. It's right along with what we're doing in our educational series right now. We have a Strangle Mastery series where we're focused heavily on the Greeks, how options work. And in the last 30 days, unless you're too far out of the money, but in the last 30 days, Gamma and Delta become juiced. They're like on steroids in that last 30 days. And it's interesting the way that works, because generally people think of theta as like, oh man, theta is so heavy in the last 30 days. Maybe, or maybe the theta's gone already. And then you don't have to worry about that. And you can just focus on, if the stock begins to move, the gamma and delta move and accelerate back to the upside. So we get questions when we have new subscribers, because you can look on our trade list. This is what our trade list looks like. Every single alert that we have, it looks just like this on our website. And we list every position, and we have these mark-to-market graphs that show where the position is every single day. We're as transparent as you can possibly be. We show you where every single one of our alerts are every single day. So I don't know anyone that's as transparent as we are, and there's no way anybody could be more transparent than what we show. We show you everything. So I shared that with you because that was a good illustration of why we are willing to hold positions into the last 30 days. And we don't just take positions off when they're at a 50% loss, because we've had 3 lately that have recovered from nearly 100% losses. So they've all come back, and they would have all been 50% losers. So that's 150%, right? They're 3 50% losers. And when you net them all out, basically you got everything back between the 3 positions. So yeah, when you follow systems like that are easily marketable, it's easy to sell programs that, hey, look for 100% when you're right, close when you're 50% wrong. That's just a way to slowly bleed your account out until you're done and you're out of the game. So I showed that instead to illustrate our methodology. But this is how things usually work in our volatility strategy. A little bit faster than normal. This one was only 18 days. It was on you. So our entry was on April 23rd. This is when we sent the alert out for the entry to our subscribers. And you can see a really nice Elliott Wave symmetrical triangle, about as nice as it gets. There's a gap up there to be filled. And it moved and broke out, but it didn't break to the upside to try to fill that gap. It broke to the downside. So it went the other way. So we came down here and we had some areas of support, and we generated, as you can see, a 72% gain, better than 72% in 18 days. So on our volatility strategy, where we do these strangles, because you're buying a call and you're buying a put, you're going to make money on the direction when the stock breaks out of that option. Like if it breaks to the upside, the call's making money. If it breaks to the downside, the put's making money. The other option's losing money. So it does limit the amount that you can make. Our general guideline is 30 to 70% gain is what the average is on our strangles. So this one made the high end of what we usually make. That normally takes about 30 days for that to occur, and this occurred in 18 days. So we made on the high end of the range of what we usually do profit-wise in a shorter period of time than what's normal. And so these are the type of positions that we're focusing on right now, where we don't care. We don't have to pick a direction. Going back to the market and talking about where we could go up to 426. Maybe the market regains strength and we head higher from there. Maybe we correct. We're in a period of time where it's kind of squirrely. So let's not worry about picking directions when we're in this scenario. Let's just set up positions to where we don't care which way it goes. And the way we set up our strangles, this is what we're going through with our strangle mastery class with talking about the Greeks. We set them up, and our subscribers are learning about the math now involved in options, to where we are mathematically guaranteed to make money as fast as possible if the stock breaks out. So that's our big if. We are not guaranteed to make money. We are guaranteed to mathematically make money as fast as possible if the stock moves. Stock still has to move. It still has to break out. And that's so the negative of a strangle is a stock that goes sideways. But as long as it moves, we position ourselves the best way we can mathematically. So I'm sharing that with you because this is a lot sexier to talk about than a position that was at 100% loss and recovered the loss. But the other one was important as well to understand our methodology. So if we can do a really good job of recovering losses and adjusting positions that are losers and get those back to close to break even or a little bit of a profit, small loss, whatever. And then we can have a number of these. That's how you build a pretty good equity curve over time, which is what we've done since inception. So this is how our alert service works. Entry alert was sent out on April 23rd. Exit alert was sent out on May 12th. And we generated over 70% in a very short period of time. So that's kind of how things normally work. So let's go through and look at some of our case study considerations from the past, and then we'll look at some for tonight. So going back to April 13th, this was SAP. This is what we were looking at. You can see we were nearing resistance there, and there's where we are now. So it was a pretty nice breakout. I left this one on. We talked about this last week. It was a pretty nice breakout. We had about a 10-point move. Maybe you close that out. Maybe you didn't. Since we had a wave 4 that corrected right at 38% and decided to go ahead and leave this one on the list. Because again, you're on your own as far as when you get out. And in TradeFinder, you're on your own. We would have sent out alerts on the alert service. So the possibility is still there that we climb up to that previous wave 5. Obviously, if the market does break to the upside, that position is set up to do pretty well in that scenario. And then on the 20th of April, we looked at Cree Research, which you can see the triangle pattern here. Looked like it was trying to break to the downside. And so we were trading at 103 at the time, gave us a false breakout to the upside, moved to the downside. Again, would you have closed that position out? Maybe. There's still a little bit of a gap down here that hasn't been filled yet. We have some support right here that's holding. If Cree turns around and heads lower, if the market does weaken, I think there's a good chance that that gap gets filled. So again, it's, there would have been a little bit of a gain there. Would you have taken that or closed it out? No, we'll just keep monitoring it and see. And then on May 4th, we looked at this. This was a directional trade on DBI. So we were trading at 1878 at the time. And right now we're at 1809. So we had a little bit of a blip up, and now we've gone sideways. We are holding support right here. So from this standpoint, you would really want to see that 18 level hold. If 18 doesn't hold, then maybe you just want to go ahead and close this one out and move on to something else. We are in a wave 3, so you want to give that the opportunity to play out, but there's a pretty good support level there at 18. Now, if you're more of a long-term thinker, if 18 gets broken, then there's another level there. The support at 17, then it gets ugly. So right in this area is pretty good support. And again, if the market does show some strength, head up to that 426 level, and maybe even beyond, that one's also poised and set up to do pretty well. So we had Love Southwest Airlines, which we did send out as an alert to our subscribers with this triangle pattern here. And, this is one of those, the airlines caught between a rock and a hard place, right? They went through all this time where nobody was flying, and then people start to fly again, and the cost of fuel goes skyrocketing. So which side wins? Hard to tell. So when you don't know, you put on a strangle and let the market tell you. So what's happened here, and this does happen sometimes in these triangles, so this is actually a good example to show you. Sometimes you form a larger triangle, and that's exactly what's happened with Love. You have a nice looking triangle, you get a potential move down, then you get a potential move up. I've said this before, there's no such thing as two false breakouts from a triangle. You can get a head fake one direction, a false breakout one direction, just to suck everybody in, and then the big move be the opposite direction, but you don't get two of those. You'd never get a false breakout to the upside and a false breakout to the downside. It doesn't happen. That tells you you're forming a larger triangle. That's exactly what happened with this. Now, it's frustrating. We would all like to see them break out a little faster like Unity Software did. And it doesn't always work that way. Normally, however, if you're patient and wait for the breakout, you get a pretty significant breakout once it occurs, and it kind of makes up for your patience. It's like, all right, you were really patient, so here's your reward. And the reward is normally a more volatile breakout move. Frustrating until we get there, but really good once it finally happens. And then we also have Darling. This was done on the 11th of May. And again, you can see the triangle pattern here. We're to the point now where a lot of our subscribers send in charts and they show things that they're doing. That's really our underlying motivation here of everything we do at Elliott Wave Options. Education. Our goal was never just to be an alert service. I know there's some out there that's all they do. But my view has always been help it. Just to give you a 2-second background, I was a golf pro. I was a PGA pro. So if you didn't see the YouTube video, I gave a little homage there to Phil Mickelson for winning our championship, the PGA championship. That's the one that's hosted by the PGA of America. So I was a member of that for a while. So still near and dear to my heart. When I left the golf world, I was a financial advisor for a couple of years, and I got a registered principals license, which means you're supposed to oversee what the other reps are doing. Well, the principals would gather together at time with the big home offices and go through and talk about new products, etc. And I became dismayed pretty quickly because never in any of those meetings was how do the clients make money talked about. That mantra was never talked about. It was always, how do we get more assets under management? How do we get more assets under management? Because that's how the firm makes money. But nobody talked about how do the clients make money. And so I just became dismayed and frustrated by that. Now, my original intent wasn't necessarily to start doing this educational thing. I just started trading. I just wanted to be on my own. I didn't want to have anything to do with that world. And I just started trading on my own. And then the educational bug came in, and that's how we've gotten to the point where we created Elliott Wave Options with a significant focus on education. We want to get you to the point where you do this on your own. You have the education. You don't need the alert service because you're doing it on your own. In the meantime, we help you along with the alerts while you go through the educational process. But if you look at our website in the education section, ewotrader.com, if you haven't been there, things are set up as courses. And that's really what trading is. A lot of people say, I don't understand it. I don't get the terminology. I don't know anything about it. Well, it's just like anything else. You learn it. You go through the process of educating yourself. I promise you, if I can learn it, you can. So here's Darling. Back on point here, get off the soapbox. So what's happened here? You can already tell, right? So we have the same scenario going on here that we had with love. Breakout to the upside, nope. Breakout to the downside, nope. Larger triangle. That's what's going on there. And it happens. So Lear ascending triangle pattern here. Also back on the 11th of May. You can see that set up right there. What happened? Not much yet, because that support level right here at 180 is holding. Well, maybe it holds and the big move becomes a break to the upside, or if 180 holds, well, now we got something to the downside, because there's your support down there at 150. It'll happen, just takes time. Now, we also sent this one out as an alert to our subscribers as well. Some of you may be confused by this. This was Plantronics. Their symbol was PLT. They changed it. They changed their symbol. Their symbol is now POLY. So on our website, we're updating the symbol as well, because it looked like the position went to 0. And watch what happened. Boom. So obviously that position didn't go to 0. It looks like 0 because they changed the symbol. So updating that to reflect where the current options pricing are. But how about that for a breakout? Now the question becomes, do we go lower? Well, we're kind of hanging in there to see, because we're right in the middle of no man's land, and it looks like it wants to come down here. And that would be really a significant profit if we could go there, with where the put strike is and moving that far in the money. So we're going to give it that opportunity. Had a little bit of a bounce back. There's your 10-day moving average. That's what happened. That's where that expression comes from. No security in any time frame. There you go. Back up, close that gap, touch the 10-day moving average. Now we've rolled over and moving back down. We just want to give it a chance to see if it can come down and hit that level. So would you have looked at it that way? That's the way we're showing it. And a couple more real quick. We have MGA. You can see that's a nice symmetrical triangle as well. We looked at that last week. We're going to do that again this week. By the way, I'm just going to forecast and tell you, we're not looking for directional stuff tonight. We're not going to do that. We're going to look for more strangles. That's the smart thing to do right now. So there's the triangle pattern. Nothing's happened yet. Ascending triangle. This is going to move. This clicked the wrong button there. This is, I have no question in my mind that this ETF is going to move with where interest rates are teetering around, etc. When this breaks, it's going to break significantly. I don't know if it's breaking to the upside or the downside, but this is going to move. And so that's where we were, and nothing really has happened yet. You could really extend this line and say, well, okay, we're continuing the pattern of higher lows, but there's no question resistance is at 55. A couple weeks from now, we're going to come back and look at this and say, wow, look at that breakout move in the banking sector. And it doesn't take much out of these ETFs like this to generate gains, because the option prices are usually quite a bit lower. So that brings you up to date on what we've looked at in the past. So let's go ahead and see if we can find something for tonight. And as I said, we're going to look for strangles. For those of you who may be brand new, the software program that I'm using is Profit Source. You can find out more information on it at profitsource.com. People often comment about the charts are clean, they're easy to see. And to me, that's a big deal. I'm a visual learner, pardon me, which is why I think I became a technical trader, is I like to look at the patterns. And so, there's a lot of charting services out there. There's a lot of brokerages that the charts are just a mess, and it's hard to really clearly see the pattern, but here you can. And it's produced by a company called Hub, HUBB, and they've added in a whole set of indicators for people that have Profit Source as a software program and are subscribers, are alert subscribers to Elliott Wave options. These that say EWO, those are actually my searches that I spent a great deal of time back testing and coming up with, and that's what's generated the results that we've had since inception are these searches. So our subscribers get them. They're right there. They're located in there. Now, when you take a look at the consolidating stocks, look at that. There's 166 of them. Obviously, those are going to be higher when the market itself is consolidating. The market's consolidating, and you get a lot of consolidating stocks within it. There's only 2 in the impulse side. So we're going to focus on this. And here's the bullish wave 3. So these are stocks that are in a wave 3 to the upside. You can see there's 264. But if we click that button too, now the software will give us a list that has both. They're consolidating and in there in a bullish wave 3. So when we take a look at that, well, there's MGA, there's Love. So we have a few that are in it. Look at all these financials. So this is the same thing that happened to us last time, right? Last week, which is why we did the KBE. We did the entire ETF, because there's so many of them that are like that. I wonder what the XLF looks like. Let's take a look at that. Would we want to do that too? Maybe. Let's see what the XLF looks like. Well, we'd like to see a little, I mean, the series of higher lows is as good as it gets, right? I mean, that's awesome. Some resistance at 38. That's only for the month of May. Would love to have seen that a little bit longer, but You know, that looks pretty good. There's nothing wrong with doing that as well. But let's take a look and see if there's anything. United Rental, we looked at that last week as well. Now, I didn't bring that up, but that was on our high value side because it was more expensive. Now, if you want to know what that means, on our website for our alert service, we normally try to keep the maximum amount at risk per alert around $500. Well, even the way we set up our strangles being so far out of the money, that does eliminate some of the higher dollar stocks that if you try to get the delta somewhat reasonable, you're going to exceed the $500. Well, a lot of our subscribers are saying, well, we still would like to do positions on those. If we have a larger account, can we do that? So we added in the high value side. And so those are alerts that are for people with larger accounts that are willing to take on more than that $500 of risk per alert. So URI fell in that category. Caterpillar, this was actually on here last week as well. So there's been a lot of consolidation this week. Not much has changed. Let's see if this becomes maybe a little bit more interesting. Really wasn't too excited about it last week. Still not that excited about the pattern. Doesn't look too bad. It's not awful. The most exciting, here's the concern, is how long it went sideways right here. So you don't want that to happen again. This is what you want to have happen. You want this move. So what I really like is when you have a pattern where you get the big vertical move and then it goes into a symmetrical triangle. That's my favorite breakout pattern of all. That look right there. You can see that we had that part, but then we've gone into this sideways stuff before we've created the triangle. So the concern would be, could we just meander away? We don't want that. We want the breakout. So I think we could probably find something a little bit, the ETF for Italy. You don't see that every day. SeaWorld Entertainment. That's another theme park in the Central Florida area where I live. That's not awful. I wonder what the options look like. Never traded SeaWorld before. I honestly say that's a stock symbol that I've never traded. But that's not a bad looking triangle. Here we have that same sideways stuff though, right? So that's really similar looking to what Caterpillar just showed us. I'm just curious more than anything else. Let's take a look at the options of this and see what they look like. That's the XLF. SeaWorld. Wow. Look at all those. I had no idea. No idea that SeaWorld was that optional. So I turn on my little magnifying glass if you're new. I know that can be some small print for you to look at. So yeah, they do have options chains in this software program as well, and some really cool risk graphs, etc. So you can do all of your options analysis right here. 31 delta there, 225 by 280, slightly wide on the spread, not horrible. Let's go over to the put side. Look at the September puts, go down to minus 26.31. That's 5 points, so that works. Maybe we go down to the 24 delta. There's a 22. And we could keep that around $500. That's amazing to me that there's that many options. I had no idea on SeaWorld. Let's look at the DMI. Let's see how low that is. Look at it diving down. That's pretty good. You can see that stock has gone to the upside and the ADX is going straight down. That is not what you want if you're bullish on the stock. And you could look at this and say, yeah, the theme parks are opening up. People are going to start traveling again, etc. That has to be good. Maybe. Look how vertical that move was. No wonder it did some consolidation. That's a rocket ship. to the upside. Can forgive this kind of consolidation right through here a little bit more in this one than with Caterpillar. Caterpillar was just kind of, okay, we moved higher, but look at the difference on how vertical that moved to the upside. That actually looks pretty good. I'm going to make a note of that one. So for 525, we'll look and see if we can find another one, but I think that warrants serious consideration. So C's, SCAS is the symbol there. Let's see what else we can look for. I don't want to go through all those financials. Let's see if there's anything on the bearish side. Is consolidating. There is one. The reason that I acted like that is we all know, right? Stocks move down faster than they move up. They don't necessarily move down and consolidate in a wave 3 the way they do on the upside. Stocks will move up and consolidate and then break up. That happens all the time. Quite often when you have a downward move, it's just boom to the downside. Let's see what this looks like. Wow, well, that's a buyout. So that's why it showed up. So when you see a flat line like this, that stock was a merger acquisition, something along those lines. That's what happens when they go dead flat like that. So that's why it has a low ADX, is because it's no longer viable. So let's take that off, and then we can try the ADX moving up. Ooh. Now, the reason that I'm looking at that with the ADX moving up is I've been using this analogy for a while now, like a volcano. When you look at the volcano, you see a big mountain, nothing's happening, right? It's just there. It just looks like a mountain. But when the volcano is getting ready to erupt underneath, you have all the lava is bubbling up, right? It's heating up. It's getting ready for the big explosion. The ADX, when you have a really low ADX and you have a really good consolidation pattern, then the lava starts to boil before it explodes. That's the ADX starting to turn up before you get the big breakout. So that's the reason that I wanted to say, well, what's consolidating, but yet the ADX is starting to move to the upside. Maybe these are really, really close to getting ready to break out. I like the low ADX because that normally tells you a stock's been consolidating for quite a while. The longer it consolidates, the more apt it is to be ready to break out. So let's go through this list. I don't want to look at all these. Lots of financials again. Maybe we just add the XLF on there and call it a day. But let's look through here and see if there's something that has a history of really mush. So many financials on here. Goodness. Wayfair, that can be volatile. See what that looks like. Huh. Well, here's the problem, right? We're going to have to add that over into the high value. What a great pattern, though. Look at that. The low of the triangle is 260. The high is at 360. It's a 100-point triangle. That's awesome. But that's, again, that's like URI. That's in the high value. So we don't count that in our analysis of our track record for TradeFinder. So we keep that down. The subscribers in the high value are, I'll do some options analysis on that in the morning, but they may very well see that stock can move, and that's a good looking pattern. Let's see what else we can find. So many financials, it's amazing. Sage Therapeutics. It's a pretty nice descending triangle, isn't it? But look how long it took that to form. So that's one of the concerns that you have when you have these triangles, is you want a nice triangle formation. So it takes a little bit of time for that to occur, but that's been consolidating for a lot of months. And it may not be in a big hurry to break out from there, but man, that is let's see what the options look like there. I just need to take a quick peek because that really is a nice descending triangle. It's huge. I am a little bit nervous about, oh, it is Sage. Okay. I'm a little bit nervous about how long it took to form that, but it's awfully well structured. Man, that one's got a lot of options too. And the spreads are wide. The spreads are too wide on that one. Okay, forget that. Well, we could pick any of these financials. There's 9 million of them, right? So let's look at Walgreens real quick. And then if that's no good, we're just going to do the XLF. It's not awful. I've been kind of cheating on this thing. We really started off with this where we are just going to do one case study consideration a week, and that was going to be it. We're just going to pick one. But there have been so many of them. See, look at this. This is hard to ignore. There's your big vertical move with a symmetrical triangle. I mean, that's pretty much what I just rattled off. So I'm going to make a note of all three of these. So I'm going to put down SEAS, then Walgreens, which is WBA, and then we'll look at the XLF as well. So all these are strangles. I don't know that you can have too many strangles on right now with where the market is. And that way, if the market does break to the upside, if it breaks above 426, then you still make money. If the stock breaks to the upside out of the triangles, it doesn't have to break down. All right, so before we get to questions, I had some notes from people that had sent in from Twitter, etc. So AT&T used to be symbol T. It's not anymore. Anybody know what the symbol for AT&T is? Is it AT&T now?
Apparently it's just T, Rob.
I thought so too, but it shows up with, oh, there it is. Why didn't it, what did I do before? I had T in there before. Weird. Okay, so big move to the downside. Support, all kinds of support right in through here. If it breaks 29 as more support at 28, looks like it really wants to, they pay a good dividend, financially sound company, obviously. Big move to the downside here, but this looks like an area where it wants to find some support. Had a volatility spike there, I'm sure. 10-day moving average is starting to catch up. Now, this could be something that you might look to do, and I'm not a fan of this. If you've heard me for any period of time, you know I am not a fan of a sideways butterfly, an at-the-money butterfly. It's too late to do a put calendar. You could have done that back on the day that it dropped, but that volatility is gone now. So this would be looking for more of a at the money butterfly where you would maybe put 29 in the middle. So maybe like a 27, 29, 31 at the money butterfly makes some sense here. I think that could work out if you're really patient and just want to have time tick away. The person that asked this was looking for income strategies. So that's something that you could look at along those lines. We did Bitcoin already. Somebody wanted to look at VXRT, which is, I think it's a biotech, I think. And this is, I don't know if this is a Reddit thing or not, but it's nearing an area of support right in here between 5 or 6. Pretty darn good move down here. Seeing that kind of volatility again. I wonder what the options pricing looks like on this. Let's see. VXRT. Yeah, pretty thinly traded, which would make sense though. But these spreads aren't wide. Look at that. And they're not expensive either. Some of these lower dollar, high movement stocks have been insanely priced options. A little higher on the put side. That's interesting, isn't it? But a minus 25 delta is $1 on the put. And yeah, that looks pretty good. That looks really good for if you're looking for a very inexpensive strangle. Maybe you've never done one before and you want to just dip your toes in the water. That looks pretty good. We're at a lot of support there at 6, but the biotech company can really do a lot. And then there was a question on Nokia, symbol NOK. Here's the concern with Nokia. Yeah, it's another one that's consolidating. So, people are still looking at those low dollar stocks. Pretty nice symmetrical triangle there. But look at where the ADX is. The ADX is at 40. So what does that mean? Well, the reason that I like the low ADX is it tells you you've been consolidating for a while and probably nearing a breakout. You don't have to have a low ADX to create a triangle and have a stock breakout. I want to be really clear on that. There are plenty of stocks that form a triangle and they break out and the ADX isn't low. However, you can have a triangle pattern, and if the ADX is high, it can go through all kinds of gyrations, the false breakouts. And I mean, you can go through a period where you're forming a larger triangle. It can take a while to break out while that ADX works its way down into that 13 level that I look at. That's the danger here. It's a good looking pattern. You could make a case for that's not a symmetrical triangle, that's an ascending triangle. I wouldn't argue with you there, but it's a triangle nonetheless. I'm just pretty nervous about that ADX being that high on Nokia. Maybe it breaks out and runs like crazy and does something. This is what makes me think it's kind of that Reddit stuff, right? The Robinhood Reddit guys, because you saw that kind of stuff in the past. We're not getting that anymore, are we? Talked about that before, and the whole Twitter world is a whole different story now than it was before. So those were some that were shared before. So go to Q&A now. Sage, question is the correction over? It's at an awfully good area of support, and if it tried to sneak out today, but if it doesn't hold there, it's yikes. So if you are long this, which it sounds like with someone asking if the correction's over, you need it to hold 70. You need it to hold 70 really bad. Otherwise, it likely comes down to 50. So it broke that level today, but remember, one day is meaningless. You have to have a follow-through confirmation day. So today doesn't mean anything, but if that breaks down again tomorrow, you could, because this was just pretty much a march up here from 50 to 70. You could be looking at a move back down there. So Randall, if you're long, watch tomorrow. Tomorrow is very important. It needs to get back above 70 in tomorrow's trade. Pankaj wants to look at Twitter. So we had the move down. So far it's held at 50, but if it didn't hold 50, it also has another round of support there at 45. So it was in an area to hold. Obviously, the big drop to the downside, significant move away from the 10-day moving average is back above that. Nice move to the upside yesterday. So at this point in time, that little touch of the 30-day, remember, that doesn't mean anything. I have the 30-day on the chart for a 1030 cross. I don't look at the 30-day as a major support or resistance level, just for the crossover between the two, the 10-day moving average being a shorter one. Now the 50-day will be a different story. So this royal blue line here is the 50-day moving average. It'll likely have a little bit of resistance there, but if Twitter can push back up to 60, certainly seems like it'll want to go up and fill that gap there at 65. Don't quite have a crossover between the directional indicators yet. Let's see what the volume looks like on the move higher. Well, you had some volume yesterday on that move up. Not so today, but today was a consolidation day. So that doesn't look too bad. as far as at least testing the 50-day moving average at 60 and then seeing if it wants to try to close that gap at 65. Taiwan Semiconductor. This is one I've watched over the years because this sucker can move when it wants to. And clearly you can see the triangle there. Just would like to see that ADX is getting close, isn't it? I mean, it's under 20, it's diving down. Like to see it get a little bit lower. Right now, we're holding support there at 110 with a really nice looking descending triangle. So can we churn here a little bit longer and get a little lower ADX? Maybe, maybe not. It completed the wave 5. It's at support. I mean, that could break any time. That stock could move at any time, and it does. So we'll see what happens. David, the next support level on the S&P, if we break down from this triangle here, I think it's filling that gap at 400. That's where I think we go. I think we come all the way down to 400, and then we see from there, and then we have to retake a look at it. But that's the next support. So if we fall from here, we're at 400 pretty quick, I would think. Mike, USO. Haven't looked at oil in a while. Sure sucks going to the gas pump now, doesn't it? It was really nice for a while. So nice ascending triangle and bouncing around here a little bit. And the ADX hasn't quite settled in. It's getting close though. It's getting close to being down there. That was a pretty good run. I think oil is getting ready to make some sort of a significant move. AMD, holy cow. We've actually had a couple weeks without somebody asking about AMD. Either that or I just missed their questions. It seemed like that one was coming up every single day. Well, we're still at the same scenario here, right? 75 has to hold. It did last time. We tried to run higher and it couldn't. Now we're back down to 75 again. But this time we're starting to generate a pretty decent triangle. We had one back here as well, and we broke up, but it came back down. And it's the same thesis here that 75 has to hold. Now that wave 4 flip up, remember that 23.6% level, Elliott didn't pay a whole lot of attention to that. He really wanted a 38.2% correction to feel good about the corrective move. So this is just bouncing up in the upper trend line, in my opinion. So the thesis still stays the same, 75 and 85. We talked about that before, and look what happened. This is why we have our rules. Trying to break to the upside, no follow-through day. Opened higher, couldn't hold it. There was no follow-through. It tried to break 85, but it didn't have that second day, the confirmation day or follow-through day. And so here we are back down, trying again at 75. So there's your keys for AMD, 75 and 85. It breaks 75, yikes. I mean, if you're long AMD, you do not want it to break 75 because that's your move from 50 to 75. That'll get retraced quickly with a couple gaps in there. It would be really ugly. You're going to have the institutional support. A lot of institutions hold AMD. They probably were the ones that tried to push it up before. They don't want to see that 75 level broken. We aren't the only ones that can look at a chart. But man, oh man, it's tedious. If you're long AMD, it's got to hold 75. If not, if it can break back to the upside and get above 85, now you might have something to the upside. But it has to break above 85 first. NVIDIA. Really nice move over the last few days, but now we're at resistance. So this is not an ideal triangle formation, but you could certainly look at this from a strangle type scenario because that's too vertical. So I don't like that. I mean, it's a nice move, and we're right at resistance. I just don't like the vertical stuff because when things go vertically up, look what happens. Here you go. This is what happens. Vertically up, what happened? Vertically back down. Vertically up, what happened? Right back down. It always does that. So I don't like this vertical move. So with the fact that it went vertically up, I don't know, there's probably juice in the calls right now, which would not make it attractive from a strangle standpoint. But if the options were inexpensive, I'm going to look at that one. I'm going to make a note of that one too, because I'm going to take a look at that from an option standpoint tomorrow as well. Again, in the high value side of things, if the options aren't too expensive, you got all kind of stuff going on there from a potential move. So if you're long, what you would want, here's what you would want if you're long. See the separation here? That's no good. So if you're long, you want it to go consolidate right here. Just go sideways here, let that 10-day moving average catch up, and then take a run at breaking above 640 and taking off for a new impulse move. There's no way it's going to happen now. It's too separated from the 10-day moving average. There's not enough strength for it to break it right now. It needs to consolidate and let that 10-day moving average catch up. If it tried to break above there, it's not going to hold. It's going to come back down. So again, if you're long, let it consolidate here. Let the 10-day moving average catch up. Maybe you get another shot to break that level. The concern here, though, is because that was so vertical. You can see it right back down to 540 in this massive area of support in no time. You guys are picking some good ones to look at. You're welcome, Cindy. Thanks for the comments. I didn't forget you. Is Bitcoin below the 200-day moving average? That's interesting. That's one thing that I haven't really looked at because it's not really one of those institutionally owned things, right? I mean, it's an animal all of its own. The reason I talk about that is when institutions have a long-term position, so we're like the Warren Buffetts of the world, right? When you're owning the stock for the long term, they watch the 200-day moving average. As long as it stays above the 200-day moving average, they stay in there. If it breaks it, they get out. I mean, that's kind of like just their rule. But it is above the 200-day moving average. It's come down and tested it. So we'll see. I mean, you hear all this talk about a big crypto ETF. I don't know how they're looking at balancing it or whatever. When you're talking about the crypto world, I'm going to talk about this in the next update, but I'm sure you saw the articles where the Federal Reserve, where we knew this was coming, right? You knew this was coming. They're doing research now. They're going to publish a paper over the summer on a Federal Reserve backed digital currency. And as soon as that news came out, then today, all over the place, it's other countries. You've already seen China, kind of putting the kibosh on Bitcoin. If just the Federal Reserve creates a digital currency, will that affect Bitcoin? Probably not, because it's one country. But if the central banks around the world all got together and created a digital currency sponsored by the central banks, that's going to be an interesting world if that were to occur. ENVA for Barron. Yeah, it's a nice looking triangle. Where's the, oh, there you go. What do the options look like here? This could be a good one too. Not bad. Spreads aren't that wide, 24, negative 21. That looks really good, actually. Good call. Good call on that one. ENVA looks really good. All right, I'm going to take one more. I'm sure the list is getting long here, and Profit Source is about to tell us that you're done memory-wise. We'll finish on coin. So we looked at this before, and I still maintain that when you have these opening prints like this, you will come back to trade up there. Now, I don't know how long that's going to take, but at some point, usually work your way back up there. So we're at 320, we're down to 240. We're not going to see anything out of the DMI. Nope. Not going to see anything along those lines. Touching the 10-day moving average. This needs to find some consolidation at some point. You know, Thompson, next week we'll go through and I'll show you some risk graphs. You can do it in the options analysis. So when you're doing a new analysis, if you just pick an option, I guess I'm doing it now, but if you just pick an option and you pick a strategy, so let's just go there and just give it the plus symbol, and then you just come right there where it says graphs. There you go. There's your risk graph right there. So there's the stock chart. There's your risk graph. You can create a summary. You can fool around with it. There's all your information down at the bottom with the Greeks. See them? Delta, gamma, theta, vega. There's all your Greeks right down there. This is a really cool program. If you're interested in it and don't have it, you're missing out. I think it's the best thing out there. So that's it. We'll end on Coinbase. And thank you for your attention. As always, very much appreciate your time. Time's valuable for all of us. It's been a good week. We'll see what happens with Bitcoin between now and next week. Just kind of in the wait and see mode. So have a wonderful week. Be back to talk to you again next week. Take care, everybody.